Ladies and gentlemen, today this is a historic moment. It's a sad and very challenging day for Credit Suisse, for Switzerland, and for the global financial markets.
So all weekend, frantic negotiations have been taking place in Switzerland to deal with the troubled banking giant Credit Suisse. It is 167 years old and has over $1 trillion of assets under management. But it seems likely in the next few hours it will cease to exist, with reports of either a takeover or possibly nationalisation.
Switzerland's biggest bank, UBS, has reached a deal to take over its embattled rival Credit Suisse, or Credit Suisse, I should say, for more than $2 billion. The takeover comes amid fears that an ongoing banking crisis.
Switzerland's financial regulator, FINMA, is calling for more powers following the collapse of Credit Suisse. It comes as UBS holds its annual general meeting in Basel.
The 166-year-old pillar of Swiss finance would be corralled into a deal that almost no one really wanted.
Credit Suisse was a leading Swiss financial institution that traces its origins back to 1856, when its predecessor, Schweizerische Kreditanstalt, was founded. Established by Alfred Esker, a prominent Swiss politician and businessman, the bank was initially created to fund the development of the Swiss railway system and boost Switzerland's industrialization. Over the years, however, it evolved into a global banking powerhouse, offering a wide range of financial services, including wealth and asset management and investment banking. The transition of the bank to Credit Suisse took place in the 20th century. The new name change was gradually adopted to emphasize the bank's international presence and ambitions, and to make it easier for non-German speaking clients and partners to recognize and remember it. In the recent past, Credit Suisse was recognized as one of 30 globally systemically important banks, which means that its collapse would have serious repercussions for the global financial system. So it becomes worth asking, what series of events caused one of the world's biggest banks to fall to its knees? The origin of the downfall of Credit Suisse can be traced back to the demise of Greensill, a British financial firm that specialized in short-term corporate loans. Credit Suisse had invested heavily in Greensill and suffered massive losses, including the forced closure of 4 funds worth $10 billion after Greensill declared insolvency in March 2021. Swiss financial regulator FINMA found that in the case of Greensill, Credit Suisse had seriously breached its supervisory obligations. It mandated additional reporting and safeguards and also initiated enforcement proceedings under 4 former Credit Suisse managers. Weeks after the Greensill debacle, the bank also incurred another loss of $5.5 billion with the default of Archegos Capital Management. Archegos' highly leveraged bets on certain technology stocks had backfired, causing the value of its loans to plummet. According to a review by the law firm Paul Weiss, Rifkin, Wharton and Garrison, the Archegos-related losses sustained by Credit Suisse are the result of a fundamental failure of management and controls in Credit Suisse's investment bank, and specifically in its prime services business. The business was focused on maximizing short-term profits and failed to rein in, and indeed even enabled, Archegos' voracious risk-taking. In October 2021, Credit Suisse became embroiled in a bribery scandal in Mozambique. The bank had agreed to grant loans to 2 government-owned firms between 2013 and 2016. While the loans were intended for maritime surveillance, fishing and shipyard projects, a portion of the funds was allegedly diverted for bribes, according to AFP. One of these loans was also kept secret from the IMF, which withdrew support upon its discovery, plunging Mozambique's economy into crisis, while Credit Suisse was fined $475 million by British and American authorities. An explosive media investigation dubbed Suisse Secrets accused Credit Suisse of sheltering billions of dollars in illegal funds over several decades. The investigation was backed by the Organized Crime and Corruption Reporting Project, a global alliance of investigative journalists, and revealed that Credit Suisse had maintained over $8 billion in accounts linked to criminals, dictators, and human rights violators since the 1940s. The inquiry hinged on a leak that encompassed data on over 18,000 bank accounts, which collectively held over $100 billion. In March 2022, a Bermuda court delivered a judgment against Credit Suisse and awarded former Georgian Prime Minister Bidzina Ivanishvili $553 million in damages. This ruling stemmed from the fraudulent actions of former Credit Suisse banker Patrice Lescaudron, whose conduct led to failures within the bank's local life insurance subsidiary, Credit Suisse Life Bermuda. Lescaudron was sentenced to prison in 2018 for betraying client trust and masterminding a fraudulent scheme that netted him tens of millions of francs. Lastly, in what is certainly not the last of many scandals that Credit Suisse found itself embroiled in over the years, but only the last that I'm going to cover here, Credit Suisse recently agreed to pay a $495 million settlement to the US, specifically to the state of New Jersey, to resolve issues related to mortgage-backed securities dating back to the 2008 global financial crisis. It also consented to pay France 238 million euros to avert prosecution on charges of money laundering and tax fraud, which were filed in 2016 and concerned illegal accounts held by French citizens in Credit Suisse. After a long series of scandals and losses, Credit Suisse was already struggling. The collapse of Silicon Valley Bank and Signature Bank caused Credit Suisse to also come crumbling down, and this demise was only accelerated by the announcement of Saudi National Bank, a top investor in Credit Suisse, that it could no longer provide the struggling bank with financial support. As a result, customers withdrew 123 billion Swiss francs or $133 billion from Credit Suisse in the last quarter of 2022, while the stock value of the bank plunged within the first few months of 2023. Credit Suisse reported a net loss of nearly 7.3 billion Swiss francs for 2022, which comes to about $7.9 billion. This was its largest since the 2008 global financial crisis. The Swiss Central Bank offered an emergency lifeline of 50 billion Swiss francs or $53.7 billion in loans to Credit Suisse, but this only gave the bank limited respite. The bank's management had hoped that the lifeline would help it regain trust and restructure its operations, but the bank continued to face challenges, and JP Morgan analysts concluded that its current situation was unsustainable because other businesses were starting to worry about working with Credit Suisse. If you've enjoyed the video so far, please hit the like and subscribe to our channel. It's free for you to do, but supports our team more than you know. Now back to the video. As a result of all of this, in mid-March 2023, Union Bank of Switzerland Group, or UBS, acquired Credit Suisse for 3 billion Swiss francs, which comes to approximately $3.3 billion. Alex Lehman, the last chairman of Credit Suisse, expressed his apologies to nearly 2,000 disgruntled shareholders in a public statement, stating that, "We are no longer able to stem the loss of trust that had accumulated over the years, and are sorry for disappointing you. I can understand the bitterness, the anger, and the shock of all those who are disappointed, overwhelmed, and affected by the developments." At the time of the acquisition, Credit Suisse was operating around 150 offices in nearly 50 countries worldwide. The takeover aimed to minimize the shock to the global banking system and brought with it the 167-year-old history of Credit Suisse to an abrupt end.